Thank you, Chairman. Director, I want to thank you and the CFPB staff for your work on the proposed rule to implement the Debt Bondage Repair Act. Senators Cornyn, Lujan, Cortez Masto, and I worked hard to get the legislation passed so that victims of human trafficking won't have detrimental marks on their credit reports that result from financial exploitation by traffickers. Can you give us a brief summary of the proposed rule and what it will mean for trafficking victims?
Yes, so survivors of human trafficking will be able to get certain rights to be able to remove adverse information from their credit reports. After the law was enacted and the president signed it, it started a 180-day clock. We have proposed the rule and intend to finalize it by the deadline. I think this will be a huge help for those victims where often financial exploitation is a key part of the process, and their lives can be ruined permanently if we can't fix some of their credit report.
Well, I appreciate that. This is an example that shows exactly why we need the CFPB out there to protect victims of trafficking and really all Americans from abuses that can take place in the financial system. And I appreciate your diligence on the issue and seeing the rule finalized. Now, as Director, as part of its announcement of changes to income-driven repayment, the Department of Education stated that it will, quote, work in partnership with the CFPB to better examine whether student loan servicing companies are systematically driving borrowers into expensive forbearance instead of the income-based repayment options that may serve them better in the long term. As you know, the Navient settlement put the scope of these deceptive practices into perspective. The Bureau stated that from January of 2010 to March of 2015, Navient, the nation's largest student loan servicer, added up to $4 billion in interest charges to the principal balances of borrowers who were enrolled in multiple consecutive forbearances, noting that a large portion of these charges could have been avoided had Navient followed the law. Can you comment on how the Bureau plans to more thoroughly monitor the student loan servicing market and prevent future abuses in servicers' use of forbearance?
I appreciate the question. I don't want to comment on Navient. The CFPB is still in active litigation on that matter. But here's the deal. Consumers don't get to choose their servicer. It's chosen for them, and they're stuck with them. And we depend on servicers, whether it's in the mortgage context, student loan context, and others, to be able to make sure they're being truthful about what the borrower's options are, particularly when they get in trouble. Servicers should not be deceiving borrowers about their alternatives to default and should actually be helping them in order to stay on the road to repayment. That's often what's best for the creditor and what's best for the borrower. And we need to make sure that they are not illegally cutting corners for their own profits at the detriment of both creditors and borrowers alike. So we will be examining them. We are working, of course, with the Department of Education on the servicers that they contract, but there are many other private servicers as well, and we expect them to be prepared and to make sure they're giving accurate information about borrower benefits.
Given that deferments work similarly to forbearance, has the Bureau looked into whether student loan servicing companies were also driving borrowers into deferments when they could have been placed in income-based repayment plans, especially when their IBR payment would have been $0 monthly?
Yes, so that is something that has long been a concern. I once remember hearing from a servicer employee who told the Bureau that, their job was to get the borrower off the phone as quick as possible. And often it was faster to be able to put them into a deferment. And often call center representatives are rated on how fast they process calls. So there's an incentive mismatch there. And we do need to make sure that there is not only not forbearance steering, but also not deferment steering, particularly when the borrower can make some payment.
Finally, recent reports show scams have become widespread on Zelle, a money transfer platform owned by the largest banks in the nation. In many of the scams, fraudsters impersonate bank employees. They trick Zelle users into authorizing money transfers. According to the reports, the banks are well aware of these scams, but have done little to enhance Zelle's security or reimburse defrauded consumers. Today, Senator Warren and I are sending a letter to the company that manages Zelle asking why it hasn't done more to protect its users from scammers. Are you familiar with the rampant fraud happening on Zelle, and has the CFPB seen a resultant increase in complaints? And would any regulations like Regulation E of the Electronic Fund Transfer Act apply in these situations to help refund customers?
So, Senator, I want to be careful on this one. It's about a particular company, but I'm certainly aware of the complaints. The fraud has gotten more egregious that we're seeing through P2P payment transfers. It's something we're highly attuned to. And again, I'm happy to take some questions for the record, but want to be careful.
Okay, I mentioned them because the greatest amounts of fraud that I understand are taking place is that. But of course, generically, I would care about how are we working to make sure that consumers don't get ripped off in that regard. Thank you, Mr. Chairman.
Thank you, sir.